Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Wednesday, February 15th. We are halfway through the week. We got retail sales numbers coming in quite strong this morning, which is helping prop up the market a bit. But we also have the dollar rising, which is quite fascinating. And we're going to go over that shortly to see if we can't glean any inferences from what's currently happening with the market. So looking at DXY, you can see where I drew the lines for the Trade the Chain community after we had a bit of a boost in DXY this morning. Obviously, 4-hour candle started at 4 a.m. my time, Pacific time, and then closed at 8 a.m. But that would be 7 a.m. and 12 p.m. for Eastern. But DXY basically broke above the range that it was trading in. We had this swing failure pattern here, closed above that previous wick, so quite a strong close. If I remove this, because I think we obviously know based on the analysis that we've been giving where next strong resistance is if we continue higher, likely to tag 105, and obviously if it ends up getting cut down, we are already had a bit of a boost, so it could come back down to potentially tag 103.7, or it'll drop back down into the range to tag the previous daily close, which coincides with the estimated 200 moving average on the 4-hour chart. So DXY currently looking strong in my opinion. It'll probably be a chop fest higher, but it does look like higher is in the cards. So have to consider that for equities and crypto moving forward. I think the most interesting part, and we're going to skip over equities really quick, is the fact that Bitcoin is up and does seem to be forming what appears to be a very bullish formation, kind of a kind of an ascending. It's not exactly an ascending wedge. It's not really a bull flag. It's, if you kind of zoom in, it's more of an ascending triangle. The easiest way to draw it would be this. So if we're zoomed in on the 15-minute, so here's your triangle. So if you continue on this trajectory, jump out of 22.8, and then of course potentially fail under 22.8. So the number I gave the Trade the Chain community this morning was 22.8. Obviously, that's been, where every single candle body has closed for the past, 3 hours, 3, 4, 5 hours. So 22.8 is resistance. Get above that, and now you're talking about 22.3 again, which we mentioned, get above the demand zone. 22.3 is certainly the next target. I think, trying to play for a breakout here is a little bit tough, but it does seem at 23.3 is in the cards in the near term. Of course, that is dependent on 22.8 breaking. So break 22.8, probably going up to 22.3, and then we can discuss higher. Fail at 22.8, and I would say you're heading back to at least the demand zone for a catch around 22.3 or 22.5. So, and then of course lose the demand zone, and you're hanging out back where we were trading at for end of this week and into the start, or end of last week, I should say, and into the start of this week. So precarious position, but the real fascinating thing is dollars moving in the same direction as crypto is generally. So this is, to me, a small sign of strength in crypto, although it is not the end all be all yet. Typically, you would expect with a dollar kind of chatting, the Chad meme for what looks to be a strong candle, you would typically expect, based on historical reference over the past year and a half, that crypto would decrease on a rising dollar. So the fact that crypto is strong while the dollar is rising is definitely cause for having the thought, do I need to change my bias? Does crypto strength in the face of a strong dollar mean anything to me? And preliminarily, it definitely means that crypto seems to have some strength and a strong bid. Now, my other apprehension, and I'm getting a lot of mixed signals here, is that this entire rally this morning was led evenly by perps and spot. But then once we got to 22.8, you saw a lot of spot taking money off the table. And I think this is fascinating because it's mainly a lot of perps that are keeping us up here and want to bet above 22.8. But spot is really kind of not participating in that type of price action, and it's obviously decreasing. So typically what you'll see is eventually perps will catch up to spot. Typically spot does not catch up to perps. Of course, it can certainly go either way, but usually what happens is perps will catch up to spot. And that's what worries me about that bullish inference from DXY, is that, what happens if the market just decides that, it's been faking enough people out to get into longs before it starts to reverse the other direction. And of course, that's the worry if you're longing into a strong dollar. So, the bullish news, the bullish take is that dollar is increasing. So is crypto. Crypto is a little bit more immune to the dollar. Crypto is strong, long crypto. And then the other side is, well, this is mainly just perps. Spot's not really participating. Spot doesn't like the 22.8 level and seems to be selling off. So, and then in that inference, it's like, is, what we observed in relation to DXY and equities, is that a red herring? Is that a kind of a false positive? So, a lot of thoughts and difficulty judging exactly what's happening. If you really put a gun to my head, just based on this action, I would say that 22.8 probably not going to work out, but that's based on previous bias from the market. And now myself, speaking, but all of us in the market now have to think about the fact that, is DXY, is that correlation, now are they being correlated, or will we continue with inverse correlation? So yet to really flesh that out. And the moral of the story is, for now and for the next several hours, I think 22.8, line in the sand, get above it, good things happen, stay below it, likely bad things happen. So moving back to equities, we can see that, drew the lines for the Trade the Chain community while we were at the lows this morning. Basically, moral of the story for equities is get above the previous daily close, which is currently resistance as shown by previous candle and current candle. Get above that, you've got a path to 4160, stay below the previous daily close, and you're probably back to 4110, 4100, which is estimated 200 moving average. As you can see, has our 1 hour estimated 1 hour estimated 200 moving average, apologies there, is obviously support. As you can see, two candle bodies here, a bunch of candle bodies here, a couple wicks. And so now we are wicking at the high end of this small little range. So fail at 4130, back to 4100, 4110, lose 4100, back down to the lows that we met late last week. And of course, also interesting, obviously Bitcoin zooming, much stronger than equities, but equities not dumping on a strong dollar. Again, so, something else to make a note of. Moving higher, so is the dollar. It's not moving higher in as much of an extreme fashion as Bitcoin is, but it is moving higher. But, saying a lot of buts because, we're having warring indications of market direction. Equities are still under resistance. Bitcoin is still under resistance, that 22.8 level. So again, really the trigger is break above, good long, stay below, and confirm below, probably a good short. And both of these, I would say, are more or less scalps, probably not swings. We do seem to be range bound. We've got a lot of differing data. CPI was what came in a little bit hotter than expected. But that was telegraphed to us before the weights changed. Obviously, there's the worry: our energy prices, our used car prices. Is that going to hurt inflation month over month as we continue into the year? And then the other side is today. The reason why we got the early boost was because retail sales numbers, I think, came in like more than double what they were expected. So, which means the consumer is spending. Consumer seems to be strong, but and my thesis, just kind of thinking about the whole thing together, is that if inflation is not decreasing or it's staying flat, and obviously we only have 1 month of data of a flat, slight increase. So, that could change next month, fingers crossed for the bulls. But on the other hand, if that stays flat or continues rising and the consumer is still spending, demand is going up, while supply chains are mainly solved, but we're dealing with other forces such as just high commodity prices and inflation from previous days. So if the consumer is strong in spending and demand is high at current inflation rates, does that, hurt inflation coming down? Does increased spending, low unemployment rate equal higher inflation because the Fed's not forcing us into, a soft landing recession? The economy is still chugging along pretty strong. So there's that other side of, although we're getting strong economic data, does that kind of equal stronger inflation, which then moves prices in the market, or asset equities, crypto prices lower as the Fed continues to hike and hikes for longer. So I think that's also what the market is pricing in today. As you're seeing a lot of volatility with equities, and of course crypto high beta seeing a lot of volatility, but a lot of wicking action here where you would expect, typically you would just expect to move straight up to 23.3 without too much difficulty. But now we're getting cut, and that cut is happening after the retail data is hit. And I think that's because, in my opinion, the market is trying to assess exactly what I'm saying. If the consumer is still spending and is spending stronger with current inflation, will that hurt inflation down the road? I have a feeling that this is a signal for the big brains that although this is positive economic data, we are still potentially in an area where positive economic data could translate to negative market action, because the Fed does want all of these, the unemployment and inflation to go the direction they want. Unemployment's obviously moving lower. Inflation seems to be at minimum flatlining at current price, or at current levels. So I'm still weary. I'm still not, very much a bull. I think at best, we range, maybe we get up to 23.3, maybe we get up to 24, form a lower, higher low, or I'm sorry, a lower high, because the next high would be lower than what we reached on the 1st of February. And then maybe we end up trickling back lower. So I'm not 100% sold on this. I know I've been quite bearish, and I know that we are obviously continually rising day over day. Although my opinion has been bearish, I've done my best to give everybody the 360-degree view and say what certain triggers are for various trades. So I hope nobody's, taking my bearishness, flat out. And I hope some people are fading me based on the directionality and the triggers that I gave. Not really been losing too much money in the market, just due to tight stops and intelligent trades. Plus, made a lot of money shorting on the way down. Probably should wait to add shorts until we either tap this level or 22.8 is confirmed rejected. So, if you are a bear, maybe time to just take a little breather and continue to track what DXY is doing in relation to equities and crypto, because, we could just see a really ugly week where we're having just, some volatility up, a bunch of people long, volatility back down, and then continue to trade in tight ranges with very small local breakouts and really hurts, the passive traders and stuff like that. So be very careful with this market. Of course, take everything I say with a grain of salt, but please do respect the levels that I give, because we've been trading very technically driven. As you can see, the way that I typically trade based on the demand zone, based on resistance and previous daily close, they typically always end up with being support or resistance in some way, shape, or form. And we obviously know the good triggers to make, whenever you are placing a long or a short trade. So it does look like we are, trying to crack up above 22.8. Let's see if that happens. If it does, we'll nice little long up to 23.3 is in play, and potentially higher depending on how that resistance reacts. So good luck, happy trading, and see everybody at same place, same time tomorrow.